What is a non-resident speculation tax in Ontario? And how does it affect a foreign buyer? The non-resident speculation tax, which is also informally known as the foreign buyer's tax, is a tax that foreign purchasers must pay at closing when buying a house anywhere in the province of Ontario. The NRST is 25% in Ontario and is now in effect as of October 25, 2022. NRST only applies when purchasing buildings with 1 to 6 units. Buildings with more than 6 units do not apply. If a foreign buyer purchases a $1 million home in Ontario, they will have to pay an additional $250,000 fee at closing. This brings the total cost of their purchase up to $1,250,000 before closing cost, and then the usual cost of closing like land transfer tax still applies. Why was the non-resident speculation tax introduced? The speculation tax was introduced by Ontario government in an attempt to gain control over a housing market that was spinning out of control. Economists disagree on whether using a foreign investor tax in Toronto will be effective in helping to slow the rising cost. But foreign buyers will have to deal with the non-resident speculation tax regardless of its effect until the law changes. There are some exemptions from this rule for new Canadians and those who wish to make Canada their principal residence. Some of the exemptions are as follows. Tax does not apply if you are a permanent resident or citizen of Canada. If you pay the tax but later become a permanent resident or citizen, you may be eligible for a rebate of what you paid. You must become a citizen within 4 years for this rebate to apply. If you pay the tax but live or work in the area, you can apply for a rebate. You must have worked for at least 1 continuous year from the date of your property acquisition with a valid work permit or visa to be eligible for a rebate. Foreign students do not pay the non-resident speculation tax if they are on an approved study period for at least 1 continuous year. The student must be enrolled full-time. Those applying for landed immigrant status do not need to pay the tax. If you are a Canadian citizen living outside of Canada, you do not need to pay the tax. Spouse. Foreign nationals who jointly purchase a residential property with a spouse who is a Canadian citizen, permanent residents of Canada, nominee or protected person. Nominee, that is foreign nationals who are nominated under the Ontario Immigrant Nominee Program. Nominee at the time of the purchase or acquisition, and the foreign nationals have applied or certified that they will apply to become a Canadian citizen or permanent resident of Canada. Protected person, that is a foreign national on whom refugee protection is conferred. Protected person immigration and Refugee Protection Act, Canada at the time of the purchase or acquisition. Otherwise, all residential purchases made by non-citizens, including foreign corporations, will be taxed in Ontario. Please be aware that these rules apply in Ontario and that each province in Canada may be different. One last note for anyone trying to get around this tax. If any individual involved in the purchase is a non-citizen, non-resident of Canada, everyone becomes responsible for paying the NRST. If your partner becomes a resident down the line or otherwise fits into an exemption category, you may not have to pay for the fee. If you're unsure about your eligibility in this situation, the best way to find out is to contact a tax expert or the Ministry of Finance directly to determine what your status will be. You might like to watch this video next to learn more about buying a Canadian property as a foreigner. Subscribe to my channel for information and tips about buying and selling your home in the Greater Toronto Area.